Welcome to the B.F. Anderson Techno Fundamental Report for January the 4th. Walter Deemer. I spent the holidays reading his book. Now, it's a very easy book to read. It's short and sweet. But he's famous for a quote where he says, "When the time comes to buy, you won't want to." He wrote a whole book about this very topic about how human psychology can get in the way of making good business decisions. So anyways, timeless pieces of wit and wisdom compiled by a Wall Street legend. Here's one of them. It says, the market gets oversold at a bottom and the most overbought at the beginning of an advance. So this ties into the title of the book because it's saying that, when the market's oversold, when it's really just down in the dumps, that's a bottom. But when it rallies and then nobody wants to buy because they're afraid they've missed it. Here's another one. A bull market is when you check your stocks every day to see how much they went up. A bear market is when you don't bother to look at it anymore. You could become complacent. That's what he's talking about. Now, here's an important one. Financial stocks are the canaries in the stock market coal mine. Financial stocks usually turn up or down ahead of the rest of the market. Furthermore, financial market stresses almost always surface in financial stocks before the rest of the market. So you really have to keep an eye on the financials, which we do. Now I want to take you back in history for a minute. Alan Greenspan, he was asked one time in Congress, what made the United States of America so economically stable and the strongest in the world? And his answer was, because we have a constitution that guarantees property rights. So that separates us from the barbarians, I guess. Also, if you think it and take it to the next step, World War II was all about protecting us and protecting our Constitution because there were other countries out there that wanted to bring communism here. Well, it just didn't, communism doesn't seem to work out. So where am I going with this? I'm just wanting to stress again how important demographics can be. Now, if you just go with me for a minute here, baby boomers turned 35 in this area. That's when they start spending houses, babies, furniture, the whole deal. So we go into an economic boom starting around this period, which was really around, the bottom was in 82, and then we took off. We went for 20 years in an uptrend, bull market. Now, the baby boomers turned 54 here. Coincidentally, we go into a bear market because their spending years, they become a drag on the economy. So we went through a major bear market cycle here, the dot-com crash and the '08 financial crisis. We've started a new bull market here. Now, what's important to understand is the concept of the next baby boomers, which is the millennials, which are the children of the baby boomers. And you also have another group called Generation Z. And there's a kind of a triple whammy here because back here, nobody had 401ks, but they've got them now, and they're going to have required minimum distributions, which will just continue to flood the economy with additional capital. Now, millennials take over baby boomers as America's largest generation. And then you look here, this is a chart saying income and expenditures by age group. Well, you can clearly see that the big income and the big expenditures come between 35-44 and 45-54. Then it starts to taper off. So demographics are important. The other thing that's important here is market breadth. Markets are strongest when they are broad and weakest when they narrow to a handful of blue chip names. Breadth is important. A rally on narrow breadth indicates limited participation and the chances of failure are above average. So for the last year, these 7 stocks have dominated the market, whereas the other stocks, which are the small and the mid caps, have not. Now, is that going to shift? Well, let's take a minute here and let's look at some graphs here. Now, you can see here that the advanced decline line on the small caps has been very positive. Correction looks pretty normal to me, but I do want you to know that, the small caps do offer more risk, but there's the return. So let's look at all the indexes real quick. I'm using a graph here where I've got the 10-day moving average, and I've got the 21-day moving average and the 50-day moving average. Now you can see here, since the beginning of the year, the NASDAQ has broken below these moving averages, so it indicates maybe be a little cautious here. Mid caps, same thing. We're seeing some breakdown. We've had a wonderful rally. I mean, it's gone for basically nine weeks. So a correction, maybe it could get worse. But let's just keep looking at these indexes because we got to see something that looks positive. The New York Stock Exchange is the most positive. Now realize that's a lot of big oil, a lot of financials, big banks. That index is holding up the best at this point. Small caps, very encouraging with this gap up here. We thought for sure that this was the beginning of an uptrend. However, small caps are starting to break down here. Continue to be cautious. S&P 500, not as bad, but again, we're seeing a break below the 10-day, holding that 21, but barely. Now, let's look at some stocks. Apple, breaking down. Downgrade, we're talking about a $3 trillion company that's getting to a point where they're having trouble growing revenues. Everybody's got a phone. Every mutual fund owns a stock. This is going to be a problem. It's going to need to consolidate for a while. I would watch Apple, but it's not a buy. Advanced Micro Devices, just another example here. They're really hitting the tech stocks in here in this pullback. So this is some rotation going on. Amazon, pretty much the same thing. Not as bad, but you are getting that rollover. Continue to watch. Let's look at a few more. This is a fund of growth stocks, things like Tesla. Kind of really broke down here at the beginning of the year. Again, it's just kind of raising a red flag here. I would continue to be cautious. Boeing, here's the beautiful rally here. They got that big contract in Saudi Arabia. However, based out and rolled over. Now, one thing that's important to mention here, all during this basing period, we really did not get any decisive volume signature. So that would have kept you from buying in here, but you were definitely getting volume signatures down here. So anyway, thank you very much. If you have any questions, please let me know.